Welcome to our continuing series of 2026 Year Ahead Insights. I'm Chris Heisey, Chief Investment Officer for Merrill and Bank of America Private Bank. Today, I'm joined by Liz Everett Chrisberg, head of the Bank of America Institute, the team that analyzes proprietary data from millions of Bank of America clients to give us a near real-time view of spending trends. They literally have the pulse on the American consumer and small business. Liz, welcome.
It's great to be here.
I want to get right into it. We've surpassed the Thanksgiving holiday. We've had Black Friday, Cyber Monday, when we're talking about holiday spending. Take us through all of that as you see it right now.
So I think, as we're going through all these days of the week and all these different words, now is the time of year when the dictionaries come out with their word of the year. But if I were advising them on what the word of the year should be and what sets up for 2026, it would be resilient, because that's how the consumer has performed. Spending continues to grow, wages and income continue to grow. That being said, there are some signs of stress, on the margins. We are seeing, while credit card spending, is going up, and while actually we're seeing a decrease in the number of people who are carrying a balance, we are seeing a growing number of people just pay their minimums.
Let's talk a little bit about now the drivers of the overall backdrop. You mentioned pockets of stress, whether it's overall like loan management, if you will. You're not really seeing it overall in the aggregate data, because who's masking over some of the weakness?
The key to understanding the consumer in general is always the labor market, and we can talk about that. But the other key is there is real disparity between what's going on in higher income households versus lower income households. And when the reason that gets masked is because higher income households, the top third, essentially, top 30%, drive more than half of the consumer spending. And when we look at what's going on in the labor market, what we're seeing is wage growth for higher income households is up at kind of just off the highs of where it's been over the last 4, 5, 6 years. Whereas lower income wage growth is still growing, but it's just off the lows over the last, call it, almost decade.
Holiday sales, you talked about resiliency. That might be the word heading into 26, and maybe for all of 26 again. What about through the United States? Any real regional spending patterns that you are witnessing in the data?
We're seeing the South and the Midwest are kind of growing their spending, whereas the Northeast and the West are a bit more muted. Now, why is that? Let's take a step back. We're talking about the overall health of the consumer. One of the things you hear a lot of people asking questions about is so many households are living paycheck to paycheck. And what does that actually mean? We tried within the Institute to quantify that. And what we did is we looked at how many households were spending more than 95% of their income on what we considered necessities. And what we found was just about a quarter of households are living paycheck to paycheck. And interestingly, that's up from last year, but all of that growth was in the lower income. But what we also saw, going back to your regional question, was the Midwest and the South had higher absolute levels of those people living paycheck to paycheck, but it was coming down. Whereas the Northeast and the West had a lower number, but it was actually growing year over year. But one of the things to understand about what's driving, or at least partially driving, consumer spending growth right now, particularly on the retail side, is inflation, is tariffs. So it's not necessarily all that consumers are consuming more and they're spending more. Some of it's going to be that price impact.
Liz, there's much talk in the investment world about, is AI in a bubble? What we have seen could be dramatically different in terms of spending. Let's talk about AI impact on small business spending.
Sure. The 2025 Business Owners Report that just came out from Bank of America, it reported that more than 3/4 of small businesses are already investing in AI. And we're seeing that not just in the survey, but in our data too. So there was almost a 10% growth in the amount of money that small businesses are spending and investing in AI. And that's even as they're pulling back in some other discretionary areas, like travel, like advertising. So this is something that business owners are recognizing is going to change their business. They're getting in, they're continuing to invest in it now.
Let's talk about wildcards in spending that could mask over regional differences in cohorts. It's experiential spending, whether it is something like a large sporting event, a large concert perhaps. What is the data telling you there?
So this has really been for the past 2 years, we have seen people want to be together, people want live events. And what we see in our data is around these really significant live events, you see an uptick of between 7 and 10% of spending in those local areas as people are, one, wanting to be together, wanting to see them, wanting to travel to it, but also impacting the economy around where the events take place.
If you had to describe right now the momentum that is occurring in experiential spending, what is it in 26? Is it going to accelerate more, take a breather, or perhaps go back to trend?
Well, I think I wouldn't fight the World Cup for anything. So I think that in and of itself is going to be, we obviously care about that, but that's going to continue to be a driver. But I think in general, we're still seeing travel spending. People still want experiences. They are maybe making different decisions than they were in the YOLO. We've been tied up, pent up. And so they might not be making as many decisions, but they still are experiencing the services. We saw a bit of a rebound on travel as well. But people might be making a little bit more cautious decisions. And we talked about the resilient consumer. We talked about some of the pressure on particularly on the lower income. And people are making choiceful decisions. They are still spending, but they're going to figure out where they're going to do it responsibly.
One last question around positive surprises. Any positive surprise in a particular trend in 26 that we should be on the lookout for that yet has not materialized?
That is a really tough question, but let me talk you through an analysis that we did that looked at where the differences were between higher and lower income spending. Because as we talked about, it's the higher income consumer that's driving most of the growth, but the lower income consumer is also still spending. And that we saw differences, really big differences, actually in airline spending, where the lower income consumer was pulling back. In restaurants, they were also pulling back. But the one category where everyone is growing their spend is in cruise lines.
Wow.
Double-digit growth for both lower and higher income consumers. So that is where people want to be in 2026.
Cruising into 2026.
Cruising into 2026. The resilient cruise into 2026.
Liz, I want to thank you for joining me today.
Always great to be here.
We hope this video helps you better understand some of the ways consumer sentiment may inform behaviors in the next year and help you to identify opportunities and risks to watch out for. Keep in mind that investing is first and foremost all about your long-term goals. If you work with an advisor, they can help make sure that any decisions you make in response to short-term events and long-term trends fit with your overall investing strategy. Thanks for watching.